Another check on Tesla, climbing on a big earnings beat, adding about $57 billion in market cap right here in overtime. Stocks up 9%. We're just over half an hour away from the earnings call, but joining us now is founder and managing partner of the Wesley Group, Steve Wesley. He is a former board member at Tesla. Steve, it's great to have you back on the show. It looks like margins are a big part of what matters here for Tesla. It looks like every margin metric the company beat, including GAAP gross margin ex regulatory credits, which came in at 17.1% versus expectation of 16% and change. What was your biggest takeaway? Was it the strength in profitability here and the return to growth of margins, or was it something else?
Look, I think solid numbers. $2.2 billion in net income. That's great news. But if you look more carefully, I think people have to be a little worried about stagnant growth. They delivered 463,000 cars this quarter, 25.2 billion in revenues. They're on track to grow from about 96 billion in revenues last year to 100 billion this year. That's 4% growth. And this is a far cry from the 50% growth Tesla had just 2 and 3 years ago. Big picture, no $25,000 car on the horizon. The company's betting the farm on the robo-taxi. That appears to be 2 years out. I'd be a little worried. The saving grace here, though, Tesla's energy division is taking off. They will do roughly 10 billion in revenue this year in Powerwalls, Gigapacks. That's 50% year-over-year growth. Right now, Tesla's energy division is saving the company.
And they did talk about this in the results, that the energy storage deployments are expected to more than double year over year in 2024. But they did also make comments about plans for new vehicles, including more affordable models, that remains on track for start of production in the first half of 2025. What do you read into that?
Well, we'll see. They don't have a full cupboard of new vehicles. The Cybertruck's been a bit of a flop. I think they made an error in not bringing the $25,000 car out sooner. What Tesla appears to be doing is coming up with a slimmed down version of the Model 3 that they can hope to sell for that price. The rub is BYD has come on like a freight train, really taking over the subcompact market with $10,000 to $20,000 vehicles, booming sales in China, Southeast Asia, Mexico, heading our way soon. So the big smackdown between Tesla and BYD is coming. That's going to be what investors should watch.
Steve, if I were to take the other side of this excitement over the margins being better, I might say, well, maybe they stopped cutting prices to goose deliveries, and so that makes margins better, but you got slower growth and lower deliveries. Has anything really changed?
I think you're dead on right. I mean, look, despite what you read in some papers, more EVs are being sold every year in the U.S. and globally, 21% globally. 1 out of 5 vehicles sold in the world, 17 million, will be electric or EVs this year. So whoever wins the EV market is in great shape. Tesla's in a strong position, but they need new products, and the fastest selling segment of the auto market is that subcompact market. They don't have a great product there. China's BYD Seagull are selling for $10,000 a car, and it's a pretty good car. Now, a lot of Americans will say, we're just going to slap 100% tariffs on that. Look, they can sell the Seagull in the U.S. for $20,000, and it's still going to be a pretty attractive vehicle, and you need to be very careful. Chinese don't turn around and start slapping tariffs on U.S. cars sold in China. So
how many quarters? How many quarters do you think before we see that play out? And is Europe basically lost as an EV market for brands that aren't Chinese?
Well, look, 7 of the top 10 EV brands in the world are Chinese, and so I think the U.S. finally got the memo. President Biden, Harris, the IRA Act. We're building battery plants and EV plants in the U.S. quickly. You're going to see more models coming to the market. Our grid is being built out. EVs are coming. By the way, for the first time ever, this green premium you had to pay to buy an electric vehicle has turned into a green discount. These things are just getting cheaper because the cost of batteries continues to come down. But Tesla and the other major automakers would be wise to look at the Chinese and think really hard about how soon they can get that $20,000 EV in the market. That's the holy grail.
So what is going to matter the most from Musk and the rest of leadership on the call then?
Well, look, investors short term are going to be happy with increasing profitability. But longer term, the real issue here is how much longer can Tesla be valued as a technology company? And to do that, you got to do 2 things. You've got to continue to bring new product to market. Tesla's a little behind there, and you've got to show real technology products. Now, Tesla, again, is betting the farm on this robo-taxi, but their October 10th event was a little bit of a nothing burger, and they made an announcement toward the end, don't expect full self-driving until 2027. Well, heck, that's 2 years from now. Waymo's in the market, fully regulatory certified in 5 cities, moving to 7. They're booming. Tesla's got to find a game plan to catch up with Waymo.